All right, so we have been talking about how to create all kinds of tools in QuickBooks, use the QuickBooks to its fullest, and you now know how to create invoices and create sales receipts and create and enter and pay bills. And the summation of all that is that you have a lot of data in a handful of different databases, and now you want to be able to create reports in QuickBooks. And here's the report center that makes it easy to create lots and lots of different kinds of reports. We're using QuickBooks 2016 for this training, and this is one of the best financial report writer centers that I've seen. It gives you all these different kinds of reports that are pre-created in all the areas of QuickBooks here. And then if you choose to memorize and save a report in a different format, it'll put it there, and you can identify your favorites and reports that you like. And we'll talk about that in a minute. So the foundation of reports is that it takes the data that you put in and it creates a summary of it in some fashion or another. When you create reports, you're doing nothing more than drawing out the details. So we want to talk about how to make creating reports easier. If you go to your edit preferences to the reports and graphs, I would suggest that everyone go in as an action item and check this box right here. Prompt me to modify the report options before opening a report. It will speed up your process of looking at reports. Simple thing. Then refresh automatically, yes. Those are the two that I would suggest. You can play around with any of those. I would always look at reports on an accrual basis. Accrual basis means that as you enter an invoice, it shows up as sales to you. Cash basis means that when the customer pays, it shows up as sales for you. So when you're actively using QuickBooks, I would want to know what a customer owes me, and when I see a report, I would be able to see, well, I've made $1 million. I can look at another report and see that I haven't collected very much of it, but maybe I've billed out $1 million. But I want to see it on the accrual basis because I want to see the company like live. Where is it right now? It has so much sitting out there in accounts receivables and payables and that kind of stuff. When it's time to do the return for the tax return, we almost always want the cash basis for that report. So you can go in here anytime and change it from accrual to cash basis to do your tax return. You're going to show less profit normally on a cash basis than you will on an accrual basis. Not all the time, but frequently. So those are a few things with preferences. Now when creating reports, it can be so easy to just simply go in and look at a profit and loss statement, right? So you look at this profit and loss, and great, here's the income and the cost of goods sold, giving you a gross profit of this much, and then here's your overhead type expenses that cause you to show a net profit of $17,000, right, on the accrual basis. And these reports are cool and very valuable. You want to look at these all the time. That first one. The second one you want to look at all the time as well. This is the balance sheet. And what a balance sheet shows you is your assets in your business, such as cash, accounts receivable, and inventory, and equipment. And then your liabilities will show you like your accounts payable and credit cards payable and payroll taxes and other taxes payable. Long-term liabilities would be long-term loans, notes, mortgages. And then your equity section is assets minus liabilities. And it's broken up between stock in the company, distributions that you have taken out, which is an equity draw on the profit of the business, and the retained earnings, which is the accumulated earnings year after year of the profit of the business minus shareholder distributions. So this would be what your balance sheet looks like. There are only a couple of accounts that would ever be negative on a balance sheet, and if you have other negatives, you want to look at them very closely. One of them is your accumulated depreciation. It offsets your assets as they get depreciated. The other one is shareholder distributions or owner's draws. Those would be negative. If you have a negative, something else on the accrual basis, if you have a negative in a loan or a liability, or if you have a negative asset, then you've got a problem. Something has been entered wrong. So when I get ready to do a tax return, I always go through the balance sheet, and as I make a change to this balance sheet, normally it will impact the profit and loss, and it will true up the profit and loss. So I do what's called a balance sheet reconciliation. I'll make sure that these accounts here are reconciled, your savings checking accounts and accounts receivable. It is accurate, and if there's bad debt that needs to be gotten rid of, we get rid of it, and that will affect your profit and loss. And I adjust inventory for ending inventory per an inventory count that's been done, and that will adjust your cost of goods sold. And I will correct these things if they need to be corrected. Then we'll make adjustments to your assets, maybe add some on there that aren't on there, and take accumulated depreciation, and that will affect the depreciation expense on your profit and loss. And then we'll go down to your liabilities. We'll look at an aging and make sure that accounts payable are correct, taking them out or changing them if they're not, and we will reconcile your credit card statements. We'll verify that these are correct by looking at the payroll reports that we talk about in the payroll seminar. We'll make sure that sales tax is accurate, and this is always a challenge, but we'll go through and validate that. Then we'll look at long-term liabilities. There's normally an amortization schedule that shows the amount of interest expense versus the loan balance, and we'll tie out these accounts, and if there's adjustments, they'll hit the profit and loss in the form of interest expense. And then we'll fix these accounts if they need to do a journal entry every so often to fix something like that. But once you've got this cleaned up, then you have a profit and loss that is probably fairly close to accurate, except for we may change it as well and change some accounts or classifications. All right, so let's look at the report to give you an example of something that we can do. I'm looking at this profit and loss statement for this company for the month of December. But I would instead, this is what I do for my customers, I create a profit and loss that shows me a month by month by month by month column so that I can see how my company is doing in sales and in expenses and in profit across multiple months. We're going to go in and modify our report and make it look like this. So I'm going to change it to the cash basis, and I'm going to show a column is going to be a new month. And the date range is going to be the fiscal year. And so we've changed it to we're going to look at a whole year with every column being a different month. I'm then going to go to the header, and I'm going to change this from a profit and loss to a monthly income statement. And I don't want to see the time I printed it. I don't want to see the basis. I don't want to see when it was prepared. I want to put a header on this report that says confidential. This is what we do, and we do all of our reports confidential for internal use only. And then I want to see negatives in parentheses, and I want to see no $0 amounts, and I don't want to see cents, like, you know, this right here, this to the penny. I just want to see to the nearest dollar. So then I say OK. Voila. I now have a January 2020, February, all the way through the year, and it shows the income and expenses. Now I want to collapse this report. It takes all of the sub-accounts out and shrinks it down so I can see it on one page. So I'm looking at this report, and I can see, oh, yeah, I've done 18 and 25, 20, lower, higher, you know, the ups and downs of the company. I can look at it across multiple years. I can look at the expenses, and I can say, whoa, you know, something's out of place here. You know, what's going on here? I can look at these things, and then I can double-click on anything, anytime, and say, what was that? Oh, yeah, that was a bill for such and such for repair. Okay, I follow that. And I'll go down and look at all these details. And I like this report. It's a great format. It's called the monthly income statement now. Now I want to go, I want to be able to use this report time and time and time again. I want to be able to say, I want to see the monthly income statement without having to make all those changes. So I'm going to memorize this report. And it's going to be called the monthly income statement, and I want to memorize it in a memorized report group called accountant. I say, okay. And it takes a picture of the formatting of the report. It does not save all the numbers. The numbers change every time you change anything in QuickBooks, but it saves the format. So now, if I close this, I can go into my memorized reports under Accountant, and there's the monthly income statement, right? And remember at the beginning, when we talked about preferences, we said to check the box that says modify the report before you open the report. That's why this window pops up here. So let's say it is now the month of January. I can go and I can pull that forward 1 month and say, okay, and even there's no activity in January yet, but if I wanted to now start looking at 1 month further, that would be the method to do it, and I could then memorize the report again and replace the existing report with one that will go through January now. And then a month later, I might go through February, and I go through March, and I might take a month off on this side and add a month on this side by just changing that date range and memorizing the report again. So it's a great tool to create your own unique reports, modify it, change it however you desire, and you're good to go. You've got your own unique reports. All right, so there are a lot of reports, and you should go through and look at various reports once you've got lots of data in QuickBooks. I often use the customer balance summary report, and it tells me how much my customers owe me in a very simple format. And just as important, I use the accounts receivable aging report in summary. So I can look at what's 30, 60, 90 current and all that kind of stuff, and I can review that and determine who I might need to call or collect from, who owes me money. Under financial reports, I want to talk about the statement of cash flow. Statement of cash flow is just as important as the profit and loss is, and the reason is because it shows you where your cash has gone, why you might be cash poor or cash rich. The idea is that you start with, this is the final result of your net income. So you have $117,000 of net income, but you're down $60,000 because you have not collected on the revenue that you've reported yet. And your inventory is $19,000 less because you have purchased new inventory that is an asset that is not yet recorded as an expense on your tax return. But you have accumulated $14,000 in additional accounts payable. That's an expense on your profit and loss, but you have not yet paid it, so it's cash good for you cash-wise. You have increased in some liabilities, and so you have $58,000 more from all these different activities. And then if you invested in assets, you spent $11,500, so that's where that cash went. And then a big one is, how much have you taken in owner's draws that has decreased your your cash flow? This is one that so many people often overlook, and they're like, oh yeah, okay, that's why I have no money in my company, because I'm pulling it all out to live on, right? So this figure here shows you on a given period where you're, ultimately whether you're up or down in cash because of all of the variables that affect your company beyond just the profit and the loss statement. And it's a great tool. I would get to used to it and use it frequently to know where you stand in your business. All right, so we have talked about the job profitability summary report that shows detail about how much you're profiting on each job. And in the inventory, there's great tools there to worksheets that we talked about. In banking, we've talked about the missing check report, and you can look at reconciliation discrepancies. You can also pull up previous reconciliation statements that you've reconciled to find errors and problems. And we want to talk a little bit about budgeting. So you can create budgets in QuickBooks. And it's very simple to do. I'm already on step 2 of it. You can do it by month, and when you pull this up and you say, okay, for a year-to-date budget, it's all here, all budget overview. You can enter it in. Well, the nice thing is that you can create your own unique budget in QuickBooks that will allow you to forever have good tools. So if you go into set up budgets or set up forecasts, so a budget is what's kind of almost the worst case scenario of where you need to be, you know, and a forecast is what is the best case scenario if I meet all my sales projections and stuff like that. Those are the two we're going to talk about. But when you create either one of them, you go in and you literally can enter in everything, all of the revenue by area, all the expense by area if you want to enter it in, or you can enter in $1 amount, and you can take that and copy across. If you're in this cell, you can copy it across all cells, right? Just to speed up your process of data entry. So as you go down all of these areas, if it's the same, you can enter them all in, or you can put them all in, and then maybe you know that in that month it's $90, not $50, whatever it be. And you can quickly create all of these things and create a new budget from it. And it says, do you want to record it? Yes. So you record it, and now you're able to go in and pull up the budget. And the budget will then, I should go to this report, you're then able to see budget versus your actual numbers. So when you look at the budget that you created and everything's in the system, you can collapse this and you can say, my budget was 38.4 and my actual was 24. And then you just go down and you compare budget to actual. And if you've got a company with a lot of people who are very cognizant of these numbers and looking at it all the time, this is a great tool to give them to know where they stand in their businesses compared to where they want to be. So the budgeting process in QuickBooks is really very simple. You first go in and you create it by just simply entering in numbers and enter them all in and save that file, and then you come over here and you print a budget report. Excuse me. You create a budget versus actual, and you can create graphs in a split second that compare budget to actual year by year or month by month. Great tools in QuickBooks. Look at that. By the way, there's reports for everything in here, and so you can create all of your lists as a report, and you can export them to Excel and get contact information, whatever you need, whatever you're seeking. Then there's industry-specific reports if you have the QuickBooks Premier Edition. So there's very specific reports for each kind of profession. So if you're in the contractors, you've got some more specific reports about job costing and billed and unbilled hours and things like that. If you're in the manufacturing, you're going to have things related to your sales orders and things and purchase orders. Then in professional services, you're going to have things related to billings maybe and other job costing. Right? These are the unique reports that may be of value to you in these different industries, and you can make a decision if you're not currently using the Premier Edition of whether you would use it. For nonprofits, this is a great one because it'll allow you to create donor contribution summary statements that you can mail out to your customers. A very nice tool, and it'll create the right kind of financial reports you need for the nonprofit industry. So that's a summary of reports in QuickBooks.